the largest private home in Manhattan, a private island in the Caribbean, a Boeing 727, a ranch in New Mexico bigger than some towns. Jeffrey Epstein lived like a man worth billions. And here's the strangest part. Nobody on Wall Street could tell you where a single dollar came from.
What does Epstein's fund actually trade?
No one knows. Nobody's ever seen a single trade.
No public trades, no known investors, no office anyone visited. His firm supposedly managed billions for billionaires only from a tax-free island. This is the story of the strangest money machine in modern finance. And by the end, you'll understand exactly how it worked and why the world's richest men kept feeding it. Brooklyn, the 70s. Jeffrey Epstein is a college dropout, twice over. No degree, no connections, no money. But he's brilliant with numbers, and he lands a job teaching math at Dalton, one of Manhattan's most elite private schools, without any qualification on paper. And this is where the pattern starts. It's not what he knows, it's who sits in his classroom. He tutors the son of Alan Greenberg, the future boss of the investment bank Bear Stearns. The father is impressed. The dropout gets a seat on Wall Street.
Kid doesn't even have a degree.
He prices options faster than our PhDs. Hire him.
At Bear Stearns, he trades options for the ultra-rich and rises to limited partner in just 4 years. Then, in 1981, he's suddenly out, after a compliance violation. Most careers would end there. His was just beginning, because he'd learned the only lesson that mattered. The real money isn't in trading stocks. It's in handling rich people's problems. Let's slow down on that, because it explains everything that comes later. Options are contracts on stocks. Leveraged, complicated, and in the 70s, barely understood even on Wall Street. Epstein's clients weren't traders. They were dentists with fortunes, heirs, executives, people with millions and no idea how markets worked. And he discovered something more valuable than any trade. The richer the client, the more they pay for someone who simply makes problems disappear. Taxes, divorces, bad investments. He wasn't managing portfolios. He was managing anxiety. At a partner's salary, at 33 years old. Epstein starts his own firm, J. Epstein & Company. The pitch is pure theater. He only manages money for billionaires. Minimum investment, $1 billion. Think about what that does. It explains in one sentence why you've never met one of his clients. The exclusivity is the alibi. But while he's building that image, he takes a job that should have ended everything. In the late 80s, he works with Towers Financial, a debt collection agency that was secretly one of the biggest Ponzi schemes of the decade. $460 million of fake notes. The founder went to prison for 20 years and later swore Epstein helped design the machine. Epstein himself? Never charged. He walked away rich, connected, and invisible.
I can't find a single client. Not one.
Billionaires only, they say. That's the whole story.
So the fund with no visible trades, no visible clients, no visible office, where was the money actually coming from? The answer has a name, and a shopping mall empire. And the image? He built it like an engineer. He funded scientists and conferences, gave millions to Harvard, dined with Nobel laureates. And journalists who went looking for the actual business always came back with the same nothing. When Vanity Fair profiled him in 2003, the headline called him an international money man of mystery. Wall Street's biggest names couldn't name one thing his fund had ever bought. Think about that. In the most gossip-driven industry on earth, where everyone knows everyone's trades, total silence. That's not luck, that's design. The mystery wasn't hiding the business. The mystery was the business. Les Wexner, the retail king behind Victoria's Secret and Bath and Body Works. One of the richest men in America, and Epstein's one documented client. In 1991, Wexner did something almost no billionaire has ever done. He gave Epstein full power of attorney.
He gave him what?
Power of attorney. Over everything. Jeff signs, Jeff moves money, Jeff buys and sells, in Les's name.
Full power of attorney means Epstein could borrow money, sign contracts, buy and sell property, as Wexner. For years, Epstein managed the fortune, the trusts, the foundations. And along the way, remarkable things happened. The Manhattan Mansion, valued around $77 million, moved from Wexner's world into Epstein's hands for a price no one could ever quite explain. Decades later, Wexner would claim Epstein misappropriated more than $46 million from him and his family. Here's the financial lesson hiding in the scandal. The most dangerous document in finance isn't a bad investment. It's a signature that hands someone else your entire life. Understand the pattern because it's the core of the whole story. Trust first, access second, control third. It starts with favors. A tax problem solved, a deal saved. Then comes proximity. The same dinners, the same jets, the same island. And then, one day, the paperwork. Signatures, board seats, trusteeships. By the time anyone asks questions, the advisor isn't near the fortune. He's inside it. Epstein didn't get rich despite being a mystery. He got rich because of it. Mystery kept the questions away exactly long enough. By the 2000s, Epstein's real business model is visible, if you know where to look. It has 3 parts. Part 1, tax alchemy. He moves his operation to the US Virgin Islands, where a special program cut his company's taxes by up to 90%. Hundreds of millions in benefits over the years, according to the island's own Attorney General. Part 2, trust engineering. For the ultra-rich, the biggest enemy isn't the market, it's the estate tax. Whoever can legally move $1 billion to the next generation without the tax man taking 40% is worth almost any fee. That was Epstein's actual product. Not stock picks, loophole architecture. And part 3, the proof. Leon Black, billionaire CEO of Apollo, one of the most powerful firms on Wall Street. An independent investigation later confirmed he paid Epstein $158 million between 2012 and 2017 for tax and estate advice. One client, $158 million, after Epstein was already a convicted sex offender.
$158 million for tax advice?
For the kind of advice nobody puts in writing.
Because yes, by then, Epstein had been convicted in 2008 in a Florida deal so lenient it later cost a U.S. Labor Secretary his job. The billionaires knew. The banks knew. J.P. Morgan kept him as a client for 5 more years. The machine didn't stop, because the machine was too useful. And here's the part that should genuinely worry you about how the system works. Inside J.P. Morgan, compliance officers flagged him again and again. The warnings were written down. The accounts stayed open, moving hundreds of millions. Years later, the bank paid $290 million to settle with his victims, and another $75 million to the Virgin Islands. Deutsche Bank paid too. Nobody senior went to prison for keeping the machine plugged in. The lesson is uncomfortable. The financial system doesn't ask where money comes from, as long as the fees keep coming. The gatekeepers are paid by the people they're supposed to be watching. So what do you actually take from this, besides disgust? 3 things that are true at every level of wealth. 1. When returns can't be explained, the returns are not the business. Madoff, Towers, FTX, Epstein's fund. The pattern is identical, exclusivity and secrecy dressed up as sophistication. If you can't understand how someone makes money, you are not their client. You're their cover. 2. Never sign away control. Power of attorney, joint accounts, just let me handle it. The richest man in Ohio lost tens of millions to one signature. No advisor ever needs the keys to everything. 3. The tax game is real, and legal versions exist. Trusts, foundations, residency programs. The ultra-rich pay specialists millions to use them. You don't need an island, but you do need to know the game exists, because you're playing against people who play it ruthlessly. So run the checklist on anyone who wants to manage your money at any scale. Can they explain, in one plain sentence, how they make their returns? Can you leave whenever you want, with everything? Does anyone else, an auditor, a custodian, a regulator, actually see the books? Epstein's clients were the smartest, richest men alive, and they failed all 3 questions for 20 years. Wealth doesn't protect you from a good story. Sometimes it makes you the perfect audience for one. In 2019, Jeffrey Epstein was arrested again and died in his cell before trial. His estate? Over $600 million. And the honest answer to how did he make his money was never trading. It was access, secrets, and other people's fortunes. A business that only works in the shadows. Money leaves trails. When someone hides the trail, that's not genius. That's the warning. If this made money make a little more sense, subscribe. New stories every day. Money stuff, simply explained.